It is now 11 o'clock, and I'm going to begin today's presentation in a brief introduction. Just a few housekeeping rules, and that is, if you have a cell phone, I understand that we're in the hospital environment where some of you will need to be contacted and also leave in the event of an emergency or other duties at call. I would actually ask you to please put your phones on vibrate in order to respect not only our speaker but also those around you. In the event that during the presentation you cannot hear, please raise your hand. Can anybody hear me now? Yes. Okay. So in the event that you cannot hear during the presentation, please raise your hand. I'll be turning around periodically and looking at the audience to make sure that everyone can hear. There are plenty of seats available still, so if you want to move down, that's fine too, but we are going to start our presentation right now. This morning, I'd like to welcome you. My name is Betty Thomas. I'm a staff member in the Benefits Administration Office here at the University of Michigan. If you had an opportunity to pick up one of the pen/highlighters that you received, those are for you, compliments of the University of Michigan's Benefits Office. And also any other materials out there, I would please ask that you pick up some of those materials and read those. And if any questions come up during our presentation, it's going to be advantageous for you to write those questions down when we get to the question and answer portion of the presentation. Today we're going to be having Kimberly Turner-Zorn, who is a technical expert in the Retirement, Disability, Survivors, and Medicare Department here in Ann Arbor. Kimberly interviews claimants on a daily basis, as well as handling complex cases and workloads. Kimberly is the chairperson for the Office of Training Committee and is a member of an area-wide speakers cadre. Kimberly has participated in details to the local hearings office and the Livonia field office. She has been with the agency since 2005 and is a proud graduate of the University of Michigan. Please help me in welcoming Kimberly today.
Good morning, and thank you all for being here. Thank you, Betty, and the University of Michigan for inviting me to come back. They invite me, and then they invite me to come back, which I appreciate. We have amazing technical people with us here today. They don't always get a shout out. I want to make sure that they do get a shout out today. Thank you for making my life easier when I come to visit the university. Thank you. We're going to begin this morning with Medicare. I think that that's a very good place to start. It's foremost in many people's minds, and it's a confusing topic. I want to let you know that I work for Social Security. I don't work for Medicare. But it is our job at Social Security to help you enroll or perhaps disenroll from your Medicare benefits. So I'm going to give you an overview of Medicare. I may not be able to answer every Medicare question, but I can do pretty well in terms of enrollment. Coverage stuff, you're going to have to ask Medicare. They are a separate agency. And in case you're thinking about it, there is not a Medicare office to go visit. That's a phone call. All right? So people who are age 65 or older can enroll in Medicare. We're having it's a back? Okay. If you are receiving, a lot of feedback, if you're receiving Social Security disability and you have been entitled to benefits for 24 months, and there I go, you can also receive Medicare. And in fact, we will automatically enroll you in Medicare A and B if you are receiving disability with our agency. People who have been diagnosed with ALS, otherwise known as Lou Gehrig's disease, can have an early enrollment for Medicare. We do see patients in our office who have been diagnosed with ALS. We do everything in our ability to get that awarded to them as fast as possible. If you have been diagnosed with permanent kidney failure, end-stage renal disease, you're on dialysis or you're awaiting a transplant, we can also assist you in getting Medicare prior to age 65. People ask me regularly if there are family benefits for those who are on Medicare. Medicare does not have a family insurance benefit. It is for each individual who enrolls in that program. Signing up for Medicare Part B is pretty easy. It may seem complicated when you get all of those mailings as you approach age 65 and when they run all of those television commercials. It sounds very, very complex, and it's not. If, for instance, you have already retired from your employment and you are receiving retirement monies from our agency, we are going to enroll you automatically from Medicare A and B. Doesn't get any easier than that. You get a letter from SSA, you get a packet from Medicare, and you get a Medicare card. If you are not receiving retirement monies from our agency yet, you're going to want to contact us. And you can do that in several ways. You can file online for Medicare, you can have a telephone appointment, or you can come into the local office. The time to enroll is sometimes confusing. Medicare has policies about that. They have guidelines and actual laws. There is what's called an initial enrollment period for Medicare. That initial enrollment period is the month you turn 65, 3 months before, and 3 months after. You don't want to miss your initial enrollment period because then it gets real tricky. If you do not have a reason why you have enrolled late, you're going to have to wait till the following January in the general enrollment period. And sometimes when you enroll in the general enrollment period, you have to pay a penalty for late filing. In addition to that, your Medicare, even if you enroll in January, February, or March in the general enrollment period, your Medicare does not start until July 1. We don't have any control over that. Now, there is something that applies to many, many people who work at the university, and it's called a special enrollment period for Medicare benefits. So there may be those of you who are working past age 65. You're not yet collecting a benefit from us because your income is too high, but you're coming to see us about Medicare. You can enroll for Medicare Part A if you have worked and earned your 40 credits. That Medicare Part A is free to you. That covers inpatient hospitalization and a few other things that I try not to get into too much detail. I'll touch on that. I think I made a list. Sometimes they pay for skilled nursing facilities if you have to go to a nursing home for after a hospital stay, after a surgery. There's some coverage there. But while you work, the insurance you have through your employer is your primary payer. Medicare is second. Okay, they're secondary payer. Now, if you work here at the university, you're over 65, you're working full-time, you have full medical coverage, you can enroll in Part A, which is free, and you can say no to Medicare Part B because you fit the definition of the special enrollment period. It means you have current employment, and that is the operative word, current, either through your own employment or a spouse's insurance, and you can say no to Part B until such time as you separate from the university. And at that point, then you enroll for Medicare Part B. There is a form that you will fill out, and there is a form that the university will fill out. The benefits department here is fantastic. We have worked it out. They get it right every time. So we get everything we need, and they get everything they need. Occasionally, we run into somebody who retires, goes on their Medicare A and B, and then the university calls them back. And they're going to have full coverage. It's just too tempting. They can't pass it up. So they come back to work. Now they've got full medical coverage through current employment again. You can withdraw from your Part B and work until you're ready to retire again, and then we'll enroll you again under a special enrollment period. The key there is to make sure that you don't have a gap in medical coverage for more than 8 months. So we want to make it as smooth for you as possible. We also want to help you so that you don't have a problem. We run into people all the time with Medicare issues. We just don't want that to happen, and we're willing to do whatever we can to help and explain forms and whatnot. All right, so Medicare Part A, semi-private room coverage, meal coverage in the hospital, general nursing care, hospital services, and supplies, not including TV and phone. That's what Part A will cover. If you have insurance coverage through current employment, they will pay primary. If there's anything left, then Medicare Part A should be billed. Part B is more like what we're familiar with, doctor's visits, medical tests, things like that. the university, and I can't speak for the university because obviously I don't work here, but in my experience, many people who retire from the university do not have to enroll in Medicare Part C or Medicare Part D because they carry retirement insurance. They carry health insurance into retirement from the university. That's something you're going to want to check with the benefits department prior to your actual retirement, but that is the most common scenario that we do see, okay? So you're going to get inundated about 3 months before you turn 65 with mail and TV commercials that say you have to file now or pay a penalty, pay a penalty, pay a penalty. Check with HR, check with benefits. They're very good at helping you understand that. If you're still confused, go ahead and contact us. If for some reason you need to take a Medicare Part C, they're often called Medicare Advantage plans, and you must enroll through that through an insurance company. That is not something that we can do, and it's not something that Medicare itself can do. Medicare contracts out their supplemental C and D plans to health insurance companies, private health insurance companies. They all have to provide the same kind of coverage, so at that point you're just shopping from insurance company to insurance company for the best price and to make sure that you have the coverage that you need. Many times that Medicare Part C is sold as what is called Advantage. I don't see anything wrong with that name, but it does not then tell you that there is another type of Part C plan that you may be interested in. There is something called Traditional Medigap. It tends to have a slightly higher monthly payment, but it will help you in particular if you have in retirement a home in 2 states. These Medicare Part C Advantage plans are often state-specific, and you have to know what you're buying when you buy it if you're in that situation. Medicare Part D is always D for drugs, prescription drug coverage. Again, if you have to have that, you're going to contact a health insurance company directly. Generally speaking, what you have in retirement is as good or better than what is offered through Medicare Part D, and you will not need to enroll in the Part D coverage. You or somebody else you know may have a need for assistance with paying for their Part D coverages, their premiums, their monthly premiums, their co-pays. And our agency does offer something called the Extra Help Plan for Medicare Part D. It's for those with low income, low resources. That application can be filed on paper, online, or in the office. The ones on paper work just as well as anything else. The ones online are probably your better option, but it is something that I do in the office sometimes as well. On to retirement. How do you qualify for retirement benefits? Well, you need to work, earn money, and pay your taxes into our system. Every $1,300 that you earn in 2017 earns you 1 credit, 1/4 of credit for coverage toward retirement or disability. You can earn a maximum of 4 credits per year. So in 2017, you must earn at least $5,200 in order to qualify for 4 full credits. You need to work 10 years throughout your lifetime to accumulate enough credits. You must have 40 credits to receive a retirement benefit on your own earnings record. Once upon a time, every year in the mail, 2 to 3 months before your birthday, you got this wonderful printed Social Security statement just for you. That exists only for a few people now. If you are over age 60, you will receive one. If you are under age 60, it's not going to come to you in the mail anymore, but you have access to it by going online. When you go online, you create a personal account with your own password, your own username, and you can not only see your statement, but you can print it. It looks exactly like the ones that came in the mail. It's exactly the same thing, but you need to get it for yourself online. If you have kids and grandkids over 18 and working, let them know about that, because they will have no way of checking to see if their earnings are being posted correctly to the Social Security system unless they go online themselves and check that information. I do have an information table here outside the auditorium, and there is information and a little card that you can take home if you would like to learn how to set that up. It's quite easy and quite secure. We've just added another layer of security to those online accounts, I'm very pleased to say, and I don't see very much trouble at all in the office. People love it. It's very handy, and you can look at it anytime from home. You don't have to worry about taking time off work or coming in. We used to do something, let's go back a screen. We used to do something that we don't do anymore in the office, and we used to be kind of an advisor. We used to give you some advice about when to take your retirement benefit. We don't do that anymore. The world has changed a great deal. Life expectancy has changed. The economy has changed. Who works and who doesn't work has changed. And so what we do is give you bottom line figures, and we give you some things to think about. So when you're deciding when to retire, you need to think about how you feel about going to work. Are you going to have enough money once you do retire? Social Security is a key part of your retirement monies. But we also want you to think about your taxes, because it can affect your taxes. And we want you to think about how this may affect a spouse or a minor child. Think about Medicare. Will your monthly payment be high enough to pay Medicare? Medicare Part B right now is $134 per month per person, unless you fall into a category for higher earners, and you may be asked to pay more than that $134 per month. When you take your retirement benefit determines how much your benefit will be. The earliest you can apply for retirement is age 62. Now that is a reduced benefit. Full retirement age used to be 65 for everyone. Now it's 66 and up. There's a sliding scale. 66 in 2 months, 66 in 4 months, all the way up till 67. I don't have any inside information on whether that's going to go higher or not. We wait until Congress tells us what we need to do. If you take your benefit any time prior to full retirement age, you will receive a reduced benefit. I have to count how many months early you're taking your benefit, and I reduce it by a fraction of a percent for each one of those months that you retire early with our agency. If you wait till full retirement age, you're going to receive your full benefit amount. If you wait till after full retirement age, we're going to increase your monthly payment to the tune of about 8% per year. And that's not a bad return when you look at the rest of the economy. If you were born between 1943 and 1954 at age 62, you're going to receive approximately 75% of your full retirement age benefit. At age 66, as I said, 100%. And at age 70, which is the highest I want you to ever wait, it would be about 132% of your benefit. There is no benefit to you in waiting until after age 70. Your money will not grow any further after 70. So if you're 70 and you haven't signed up, I encourage you to do so. We do have a little bit of retroactivity available of 6 months if you are over full retirement age. So we can conceivably do that for you if you've waited till after 70. If you're 70 and a half, I can take it back to 70 and give you a little bit of retroactivity. But I don't want you to wait longer than that. Who else can get benefits on your record? Not everybody knows that there are other people in your family who can receive monthly money based on your earnings. If you have a child who is not married, under age 19, and still in high school, they can receive money from your record on a monthly basis. If you have a child who is not married and they are disabled according to our rules prior to the age of 22, they can receive a benefit. A current spouse, age 62 or older, can receive a monthly benefit, or a current spouse, no matter how old they are, if they're caring for your minor child. In this situation, we don't use 18 as the definition of a minor, we use the age 16. So if you have a child when you retire who is 16 or younger, your spouse may be able to draw a benefit for taking care of that child. In addition, your ex-spouse can receive a monthly benefit under certain circumstances. You must have been married at least 10 years prior to divorce. It can't be close to 10 years. It has to be 10 years or more. Your ex-spouse has to be 62 or older. And in an interesting kind of situation, if you've been divorced at least 2 years and both you and your ex-spouse are 62 or older, your ex-spouse can draw on your record even if you have not started your benefits yet. But that's a very specific situation. You both have to be 62, the marriage had to have lasted 10 years, and you have to have been divorced for 2 years. Any amount of money I pay on your earnings record, whether it's a minor child, a disabled child, a spouse, or an ex-spouse, all of that is in addition to what you receive. The worker receives the amount due to them, and then I look at the family amount, and I see how much is left in the family amount, and I will pay, according to the law, the fullest benefit that I can. It is for a spouse, a living spouse, up to 50%, and also minor and disabled children, up to 50%. But only if there's enough money after I pay you in your family amount to give them that full 50. Otherwise, I'm going to reduce it. Survivor benefits. Your child, same situation, can receive a survivor benefit on your record, under age 19 if they're still in high school, not married, and disabled before age 22. A widow or widower can receive a full survivor benefit at their full retirement age. Reduced benefits as early as age 60. You can't really file for a widow's benefit or a widower's benefit until you have attained age 60 unless you are disabled and we get you a medical decision. So if you are disabled between the ages of 50 and 59, we may be able to pay you surviving spouse benefits called disabled widow's benefits. If your child is under age 16 or disabled, we may be able to pay your spouse no matter what their age is. If your spouse, if you pass and your spouse remarries after age 60, I can still pay them on your record. If you marry before 60, that's going to be gone. So think about that. And divorced widows and widowers may also qualify if it meets the definition of the tenure, the duration of the 10-year marriage, and the age and all of those kinds of things. At full retirement age, 100% of the deceased worker's unreduced benefit is paid. However, if you as the worker have taken an early retirement benefit, then your spouse is going to have a reduction in the benefit. We're limited to how much we can pay. At age 60, a widow or widower would receive about 71.5% of the unreduced benefit. Reduced benefits can be paid on one record at 60 and an unreduced benefit on another record at 62 or older. Let me explain that. That's a lot of words. If you are a widow or a widower, you have more choice than most people. And we would help you make the choice. We would look to see what your benefit could be at age 60 as a widow or widower, and then we would compare that to your own earnings record. And whatever is the most advantageous to you is what we're going to help you do. So if taking a benefit at 60, which is 2 years earlier than any possible retirement benefit, is more advantageous to you and to allow your own retirement benefit to grow and grow and grow until full maturity at 70, then that's what we'll do for you too. Okay? So widows and widowers still have more of a choice. Doesn't matter if you were married to the person when they passed or if you were divorced, as long as you have met the 10-year duration, it will be treated the same. This first one is very unusual. As a parent of a deceased worker, if you're receiving at least 50% of your total financial support from your deceased son or daughter, I might be able to pay you some money too. It takes a lot to get to that position and to get that kind of proof that we need, but I have done it. It has been done, and we are willing to work with you on that. If you remember nothing else when your spouse passes, remember to call Social Security and ask us what we can do. In most instances, even if you are too young to receive a widow or widower's benefit, we can pay you something called the lump sum death benefit. It's a one-time payment of $255. We have to take an application for that and send it to you. But at that point, we want to at least do that and then look at your numbers and try to give you some guidance as to what's coming in the future for you. How many people here have signed up and created their own My Social Security account online? Excellent. Oh, I'm so glad. That's great. I won't ask you how it's going. I'm going to assume it's fantastic because mine's working well, and I use mine, and my husband uses his, and we're not having any difficulties with that. Oh, I'm so pleased about that. That is probably the best response I've had since I've been doing public speaking. So we're going to use that to take a look at your earnings, to print your statement, to look at your survivor's benefit for your family, everything. The only requirements to open the account are that you have to be 18 years old, you have to have a valid email address, a Social Security number, and a U.S. mailing address. I do have some little take-home cards out at the table, so if you haven't done that yet, go ahead and do that. As I said, we've just added another layer of security, and I think that you'll be very pleased with how that service works for you. If you haven't retired with us yet, it's more of an informational thing. If you have retired with us, if you're getting money from our agency, you're going to find many more things that you'll be able to access and do online. I'm not thrilled with that screen. We've talked about that already, so we're not going to do that. All right. If you're getting benefits, you can do something like replacing a Social Security card. Michigan is one of the few states where you can order a replacement Social Security card online. It's tough to do. It's a very specific set of circumstances, but there's nothing preventing you from going online and trying that. We do have people who come in and use our kiosks online to try it, and we have seen them go through. You can also check your earnings record, change your address and phone number. Once you get your benefits, you can change your own direct deposit, request a Medicare card. And one of the most popular things is getting a replacement 1099. Somehow people lose 1099s from Social Security, and so I can just say to them, hey, go right online and print it out at home. You don't have to come in and sit and wait. You can do it right then and there. This is kind of a new situation, and I get lots of questions still. It's been enacted since the fall of 2015, but I do get a lot of questions still. Something called deemed filing. So if you are eligible for both your own early retirement and some spousal money, you're going to have to take both at the same time. So if I'm just going to use kind of an old-fashioned example. So your husband has already filed and is receiving a benefit, took an early benefit. Now you're coming in and taking an early benefit on your own record as well. You're going to have to file on your husband's right then and there with us, and we'll give you some additional money from your husband's record. It used to be that you could wait till full retirement age, you could file and suspend your record, and then allow your spouse to draw money on your record even though you were not drawing. And Congress changed that law in the fall of 2015. It was a loophole created by succeeding legislation. It was never intended to be there, and they did finally have to close that loophole. There were people in the financial world who were writing books about it and making millions by teaching strategies for filing. We want everyone to maximize their benefits at Social Security, but we don't consider ourselves a strategy. We're an entitlement program. This is your money. You earned it, and we're going to help you maximize it. Prior to the law change, it was slightly different. I don't want to go into it. I'm sorry. I'll just read it. This deemed filing used to apply only before full retirement age, okay, which is 66. Now deemed filing will apply at any age if you reach age 62 after January 1st, 2016. We look at the date of your birth, and there is a magic date of birth, is how I trained my staff on it. It's called January 2nd, 1954. If you were born before January 2nd, 1954, the old retirement rules will apply to you. If you were born after that date, the new retirement rules will apply. There weren't a lot of people who could afford to do it the old way. I don't feel like we're disadvantaging a lot of people, but there are a few that have benefited from that, and we did it gladly for them. But I have to tell you that that was not even something that I was trained on, because it was not an intended purpose. So if you hear about people who've done differently, that's why. I also like to tell people that everyone's situation is different. You may have well-meaning family members who tell you what they've done, and neighbors or close friends who talk to you about their filing. And it may not be the situation for you. We have the law, and we listen to you individually tell us what your life situation is, and we help you determine what to do. People don't always know the law behind what we do at Social Security, and they may not realize that what they've done doesn't apply to your life, or your life and what you've done doesn't apply to them. They also don't understand all of the things that go into us making those decisions. So for us, it's an individual decision, and every time someone sits in front of me or I reach you on the phone, all of that is gone, and I look at your individual situation, and I find what's most advantageous for you under the law. You can still file and suspend your benefit. That still exists. But to do that would give no one really any benefit out of that, because we're not going to pay your spouse, we're not going to pay your children, and you can no longer lift the suspension and be paid retroactively. If you file and suspend now, I can only suspend you going forward, and I can only remove the suspense going forward. There is no more retroactivity with that. That's a lot of words, but people ask me about it, so I do talk about it. And if you have other questions, I'm happy to answer. Here's a chart for full retirement age, so you can find yourself on that chart. I'm at 67, and I really hope they don't increase it, because 67 seems like a long way off right now. Let's hope that they don't change it. But they could, and we do what Congress says. And people do get a little aggravated with us sometimes in the office. Well, why is it this way and why is it that way? My friend did this and my friend did that. Well, Congress writes the law. I have to administer that law, and whatever those policies are that are derived from the law, I don't have choices about that. So I'll explain to you what I can do, and I will help you do all of that. What's really nice is that as you pay in and you continue to work, we increase your wages for you. So it's kind of, we call it indexing. It's kind of inflation. We don't leave your very first year of earnings at that very low level that they were at. We raise those benefits for you. So step one, we're going to adjust your wage levels over time. Step two, we're going to find the monthly average of your 35 highest earnings years. Not the last 5, not the highest 3, 35 years across your career. We're going to look at your earnings. We're going to pick the highest 35 out of 40, and that result is the average indexed monthly earnings. Now we have an example from 2016 here, okay? So we figure out that your average monthly earnings is $5,500. We're going to calculate percentages based on that $5,500. We're going to take 90% of the first $856 that you received out of that pot, okay? That 90% is $770 in this example. Then I'm going to take 32% of your earnings over $856 up through $5,157. That amount is $1,376. And finally, I'm going to take 15% of your earnings over $5,157. I'm going to add all of those up because that was $51. So we add the $770, the $1,376, the $51, and we get to a monthly benefit of $2,197. I'm thrilled that I don't have to sit and do that by hand anymore. But once upon a time, there were people who sat in a little room with no windows and no interruptions, and they did nothing but figure out these computations all day long. I feel very happy that the computer does that for me. I can do it by hand if I have to, but I don't like to. Let's put it that way. All right, let's visit the spouse's benefit a little bit, okay? A benefit for a living spouse is 50% of the worker's unreduced benefit, so that full retirement age amount. We will reduce your spousal benefit for early retirement. If the spouse's own benefit is less than 50% of the workers, the benefits are combined. We do not reduce any payment to any worker. So what I do is I would take the primary worker. It's a little confusing. So say your benefit is $2,000 at age 66. Your spouse has maybe $800 on the record because maybe she stayed at home for a lot of years raising the kids, or maybe she worked part-time, whatever it is. I compare your full retirement age amount of $2,000 to hers of $800. I'm going to pay her first her portion of her $800, and then I'm going to pay her some more from you because her full retirement age amount is less than half of your full retirement age amount. Confusing, right? So I take 50% of yours, that's $1,000. I subtract her amount, which is $800. That leaves $200. Okay? I may pay you if you're 66 that $200 on top of your own, but I also, if you're under 66, I got to reduce that $200 down, and then I add that to your amount, and you get a combined amount. Everybody thought Social Security was easy, right? You came in and we said, here's what you get, and you never have to think about it. We have to think about it a lot. The Retirement Estimator online is a very nice tool. Again, it's secure. It's a good thing to check into if you're going to go talk to your financial advisor. Sit down and do this. They love for you to come in with that so that you can crunch some numbers. Gives you immediate and accurate benefit estimates, and it lets you create different what-if scenarios based on different ages. So you can plug in this age and see what your benefit will be. And then you can pick a date maybe 6 months later and try that. When we figure your benefit, we calculate every month. So it's a month-to-month change when we're figuring out your money amount. It's not year to year. So you can retire any time in the year you want to. It doesn't matter. And you're going to get credit for however many months that is. So remember, it's a month-by-month change, either for lower or for higher, depending on which way you're going, not a year to year. What to expect at full retirement age. So if you're a low earner, you're going to have a pretty fantastic return through Social Security, okay? Your Social Security is going to be about 55% of your pre-retirement earnings. If you're a medium earner, that's going to be about 41%. If you're a high earner, that's going to be about 34%. That's how the program works. The program provides the greatest benefit to the person who may not be a super high earner, but who works along every day, every month, every year, paying in year after year after year after year. I have had people complain about that, but again, this is how the program was written, and everybody gets the share that the law says that they get. I don't know if any of you will have to experience something called windfall elimination provision. That would be if you had worked in another country and had a foreign pension, or if you had worked for the federal government under an earlier retirement system called CSRS. People since 1983 that work for the federal government are under a plan where we pay into Social Security, but we do still have people who have been with the agency so long that they're under the old plan. So if you have one of those situations, or if you have a foreign pension, we have to reduce your monthly retirement from us according to that pension that's outside of Social Security, whether it's a foreign government, whether it's a foreign company, whether it's inside the U.S. but you didn't pay into Social Security. One good example would be police and fire departments. In many communities, police and fire paid into their own system. They did not pay into Social Security. So City of Detroit employees would be subject to this. Ann Arbor and Ypsilanti police and fire used to be affected by that. Their newer hires are no longer. Or just next door, our neighbors in Ohio, if you work for the state of Ohio, if you're a teacher, if you're a university professor in Ohio, you do not pay into Social Security. So to get retirement, you had to work enough credits to have a retirement benefit from Social Security, and then I've got to reduce that based on that pension from Ohio. This is what the computation would look like if you fall under windfall elimination. Remember that normal computation, we looked at that 90% of your first $856. Under windfall elimination, we are only looking at 40% of that first $856. So it's quite a change. The 32%, the 15% remains the same. It's just that first one. Now, there are other calculations that can be done based on how many years you worked under Social Security, either before or after the non-covered pension. So it might be a little higher than 40%. There's a scale there. There's also something, this is the factor, I apologize. This is the sliding scale. I didn't realize it was in here. So if you have 20 or fewer years of credit with Social Security, that first factor is 40%. If you have 21, it goes up to 45. If you have 22 years of credit, it's 50. So it goes up in increments of 5 per year. I apologize. Government pension offset applies to a spousal benefit only. So if you're filing to receive a spousal benefit from Social Security and you have your own pension from work outside of Social Security, then I have to reduce your spouse's benefit as well. That's called government pension offset. I look at 2/3 of your outside pension, and I tell people I lay that right over your spousal benefit. And if there is still money left, I'm going to pay you the portion that's left after I lay that 2/3 over. Okay? There is an online calculator for both GPO and WEP. So if you are in that situation, you can check that for yourself. Here's the 2/3 of the amount. So for instance, if you are getting $1,200 in a government pension and we take 2/3 of that for $800, your Social Security spouse's benefit is $750, then you're not going to receive a payment from us, from Social Security at all, because your spousal benefit or your pension benefit is too big to receive a spousal. It is possible to receive a retirement benefit from Social Security without being completely, totally, 100% retired. If you are under the full retirement age, and we'll assume that for most people, for this purpose, is 66, you can take your benefit if you are earning under $16,920 a year. So in your first year of retirement, you might not be able to retire because you may earn that $16,920 right up front. But in your first year with us, we have the option of looking at your earnings yearly or monthly. So that means if you are working through July and you want to retire after that, we can entitle you to benefits because you will not be working as of July 1 through the rest of the year. So then you would be subject to that monthly earnings limit. The monthly earnings limit is $1,410. That's literally $16,920 divided by 12 if you forget the monthly amount. If you have retired with us and you go back to work because this tempting offer came along, or they talked you into working more hours than you anticipated, you're going to owe us some money back if you go over that $16,920, and you're going to owe us $1 for every $2 that you go over that $16,920. To be retired, to get a retirement benefit, you got to be retired. And we have to define that with a dollar amount every year. So for 2017, it's $16,920. Now that changes a little bit to your advantage the year you reach full retirement age, because in the year you turn 66, that earnings limit goes way up to $44,880. So say you turn, we'll just use July again, say you're going to be 66 on July 3rd. I'm only going to look at your earnings from January 1 through June 30th. I don't care what you make once you reach the month of 66 and beyond. Okay? So that time period from January 1 through end of June, say, that limit is $44,880. If you go over that, because I've entitled you early and you thought you were going to stay under that $44,880 and you go over, you're going to owe me or our agency $1 for every $3 you go over. So the earnings limit goes way up, and what you have to repay to us goes up as well. Again, once you reach the month of your full retirement age, you have no earnings limit, and you can earn anything you want to. You can earn $1 million a month. It will never negatively impact what you receive from us. If you work while you're getting retirement from us. We will continue to recalculate your benefit because you've continued to pay in, and we might owe you some money. We might be able to raise your monthly amount, and then we pay you the difference between what we could have been paying you and what we actually paid you until we got the report in from the IRS and we were able to do that recomputation. We also pay something called Social Security disability. We hope that you never need it, but it does happen sometimes where you have to apply. Our definition of disability is a medical condition or combination of impairments that prevent substantial work for at least 12 months or are expected to end in your death. That determination considers your age, your education level, and your prior work experience. Who can get disability? You as the worker. You have to have paid into Social Security 5 out of the last 10 years. And for younger workers, there are other rules that help them. Under age 31, less work is required. A child can get disability benefits if you are getting benefits. So if you're on disability and you have a minor child, they can apply to get a monthly benefit until they reach 18 or they graduate from high school. If your child is disabled themselves and under age 22, not married, they can receive, a spouse can receive. The child and spouse rules are the same if you receive disability or if you receive retirement. You can also apply for disability online just as you can for retirement. The word of caution I would give you is that you have to be sure to use our website. It's www.socialsecurity.gov. There are look-alike websites, and we don't want any of you to get caught up in any of those. Always use .gov, and you'll be safe on that website because the security is wonderful. So if you're 18 or older, have a disability, live in the United States or one of its territories or commonwealths, you can file for disability online. There are 3 parts to doing that. You have to fill out the application itself. You have to fill out a disability report. So that's where you tell us about your doctors, your medical tests, things like that. And then you electronically sign those forms as well as a form that authorizes Social Security to request your medical records. If you need to come in, you can call us at 1-800-772-1213 to schedule an appointment. You can walk in at your local office. I do work at the Ann Arbor office. It's a pretty great place, but it's a pretty busy place. So if you come to see us, we're going to serve you, but you may have a wait time. We have hit that bubble of baby boomers, and so there's a lot of people retiring, and we're going to treat everybody the same. We're going to give everyone the time that they need to file. But that means that you may have some wait. That's why we're encouraging people to file online. What you should know is that if you file online, it's going to come to a human being. Whether you file disability or retirement, it comes to somebody just like me. It may come to Ann Arbor, it may not. There are so many claims coming in online that the local offices can't process all of them. So there are claims reps in other offices in the country who receive those, contact you if there are questions or if they need more information, and process you into pay. In order to apply, you have to have the Social Security number. You have to be able to prove your age. You have to have basically your last W-2 or make sure that what's online is correct for your last year of earnings. If you are self-employed, I'm going to want to look at your tax return because there are some differences in self-employment and W-2 work. An earnings estimate for the year in which you are filing, because we want to make sure you're not going to go over that earnings limit. We'll need your bank information for direct deposit because the U.S. government, not Social Security, but the U.S. government requires direct deposit now. It's faster, it's safer. If something happens, I can replace your payment much faster than I ever could with a paper check. There are a few exceptions to that rule, but by and large, everybody is subject to direct deposit. We're going to need information about marriages and divorces, and we're going to have to see proof of those marriages and divorces. You're going to need original or certified copies of your marriage and divorce documents. We're also going to ask you about military service or railroad service, and that's because under certain circumstances, if it's military, we might have to credit you a little extra money if it's not already there. Railroad, we can't take railroad claims under most circumstances. There are a few where I take a railroad claim, But normally the railroad wants jurisdiction of their own workers. If it's a railroad widow, generally I get jurisdiction and I handle that. So if you know anybody who works for the railroad, I would always say call the railroad board first and find out if you need to come into Social Security. It's important to remember that your Social Security monies can be taxable. So about 40% of people who get Social Security do pay income taxes on their benefits. At the end of every year, you'll get your 1099 in the mail. And again, if you need it and you can't find it, you can go online and go into your account and reprint it. And basically, you're just going to use that as part of your tax filing, as part of your income. You can tell in this PowerPoint that we really want you to go online and use our services. But what I would say as the person behind the desk, it's a great way to file. We're going to call you if we need anything, and you can feel secure doing that. But we do still come into the office every day. So if you have a preference for that, you can come in as long as you got a good book to read and a smile when I get to you. I'm more than happy to wait on you. Talked about that. We have 60 million people receiving Social Security benefits. 8.9 million of those are disabled workers, and 1.9 million are their dependents, either spouses or children. 4.2 million are widows or widowers. 1.9 million are children of people who have passed. And 40 million are retired workers, and 3 million are their dependents. So minor children or spouses. Who's paying for all these Social Security monies? We hear a lot about this nowadays through the government. So today's workers and employers paying today's beneficiaries. Things have changed. U.S. birth rate has really come down. Where we used to have quite a few workers paying into Social Security, we have far fewer people working and paying in these days. You can see the birth rate. We're estimating in 2030 right around 2 children. It's been 2.5 for a long time. But you can see that peak between 1950 and 1960. And those are the people who are retiring with us now, our baby boomers. And what I think is funny is they've changed the definition of a baby boomer. I was born in 61, and they're calling me a baby boomer now. I was surprised by that. So in 1960, we had 5 workers paying for every person receiving. By 2016, last year, we had only 3 people paying in for everybody receiving. And we're estimating by 2035 that we'll have only 2 workers paying in per beneficiary. Our population at the same time is getting older. By 2035, we expect people 65 and older to make up about 21% of the total population. As of last year, that was only about 15%. In 1946, people 65 and older only made up about 7% of total population. So life is changing. That's why we don't advise people anymore. Things are out of our control. We can't make those decisions for you. Social Security trust funds will be able to pay only about 79 cents for each dollar of scheduled benefits after 2034 if there are no changes made to the program. So it won't stop, but you'll receive only 79 cents for each dollar of scheduled benefits. Our agency does pay cost of living adjustments on years when we are able to. It is not an arbitrary decision by Social Security or the president. Some people think that the president decides that, but what happens is that the Department of Labor does some interesting calculations, comes up with, oh gosh, I just went blank on what it's called. I'm so sorry. It's not cost of living. Whatever that figure is, I apologize, I just really blanked out. That feeds into a formula at Social Security, and from that formula we derive the cost of living increase. You can see that we've given cost of living increases since 1975. We've had 3 years starting with 2009 where we could not pay an increase. So 2009, 2010, and 2015 we could not pay a cost of living increase. Consumer Price Index, that's the one I was looking for. Sorry about that. I believe that they've set aside time for some questions and answers, both for people in the audience as well as online. I believe that someone will come to you with a microphone, if that's the plan, Betty. Is that how we're doing it?
That is the plan. Thank you.
Thank you. And Betty is going to have some questions, I believe, for me from people who are watching online as well. Thank you so much for your attention. I think we have a lady way over here. Do you see her way over there? In the back. Do you want to stand up and say your
One
question?
moment, please, until you get the mic. Thank you.
If you stand, though, they can find you. Thank you.
I'm a U of M employee, and my husband and I have U of M health benefits.
Mm-hmm.
We're both turning 65 this year. I was told by U of M that I do not need to apply for Medicare A or apply for Medicare at all until I retire because I'll be using my U of M benefits. Is that true?
That is absolutely correct. And if the question was, my husband and I are both U of M employees, we're both turning 65. The benefits office has said we don't need to even file for Medicare Part A because we have full coverage through the university. That works for me. We have no problem with that. Some people feel better having Part A. Other people don't worry about it too much because the coverage is so great. So for you, it's kind of as you desire, and I would say listen to your benefits rep because you'll be fine. Now, when you are ready to retire, then there's a form you will fill out and the university will fill out. And that's very important. I want you to start doing that about a month ahead of your retirement, just in case something goes wrong, just in case the paperwork has one box not filled out correctly. If you do it a month before, it gives us the greatest flexibility in making your Medicare start date match your employee ending date.
I do have a question from a participant online.
Thank you.
If we enroll in Medicare online, what do we do with the employment verification form from the university that tells us when to enroll during the special enrollment period?
So, did everybody hear that question? Employees who just need A right now because they're working and they're planning to continue working, is that right? Yes. So the question is, what do I do with my special enrollment form? Just hang on to it. They don't change very often. Keep it at home. And when you're ready to retire, have the benefits office fill that out. We do want it to be a recent completion with a recent date. So if you've had it filled out already, you're probably going to want to get a new one at the point at which you separate from the university.
Is there a special form upload if we have employees sign up online?
Yes, you can get that form from the Medicare website itself. It's called a CMS L564. And if you go to our website at socialsecurity.gov, we have that form. But it's really a Medicare form that we use, so you can go to the Medicare website. The one that you fill out saying you want Part B is called a CMS 40B, 40B like boy. And they're always available at Medicare and at socialsecurity.gov. Good question. The mic is on the move.
I'm a U of M employee, and I'm age 67 and still working.
Good.
My husband is already retired. From what I understood, you saying that I could, without penalty, take my Social Security while I am still working. But did I also hear that I could apply for half of my husband's as well at the same time?
Not at the same time, because we are subject. The question is, can I take my own full benefit and apply to receive half of my husband's? And that answer would be probably a no if your own benefit is at least half of his benefit. Not the benefit we're paying you every month, but the full retirement age calculation. Your own earnings record has to be looked at first. Now, were you born before that magic date of birth that I mentioned to you? That January, I don't want to memorize it. I memorize it, but I don't want to say it that way. I don't want to mess anybody up. January 2nd, 1954. If you were born before that, then we want to talk to you about that. And perhaps you might be able to draw his instead of yours. But I will look very specifically when you would come in at the law and make sure that all portions of that new law are met in order to do that for you. You're welcome.
I have a question.
Yes.
I wanted to know, for a
Wait a minute,
child,
who's talking to me? I'm sorry. Thank you.
for a child that will be 16 when I retire,
Uh-huh.
and I'm her legal guardian. Can she get benefits?
Are you the parent?
No, the grandparent.
Then that answer is usually no. There is one possibility that could happen if both of the child's parents have either passed or are receiving disability. So if you have a child at home with you for whom you are the guardian, but they are not your child, neither natural nor adopted, generally speaking, we're not going to let you draw money for that child. There is that one very small exception if both of that child's parents happen to be deceased or on disability. So legal guardianship does not allow for a monthly benefit.
I have an online question.
Sure.
Can you please address the timing for SSA benefits and when checks and payments begin? Also, what is the best way to apply for a widow's death benefit, via phone or in person? I know you cannot do this online.
That is correct. We don't have all of our applications online yet. So what was the first part of that question? I'm so sorry. I got
Address the
survivor's one.
timing for
The
applying for SSA benefits and when checks and payments begin.
Thank you for repeating that. So when you retire with us or take any benefit from us, we're going to pay you 1 month behind. So if you retire July 1, and it doesn't matter what day in the month of July, it's just as of the month, your July money does not arrive until August. And the day that it arrives is based on when in the month you were born. So you may receive it on the second Wednesday of the month, you may receive it the third Wednesday of the month, or you may receive it the fourth Wednesday of the month. Our most seniors are still getting theirs on the third. But I've been with the agency since 2005, and it has been like this at least since then and slightly before. So when you are retiring with us and you're leaving your employment, you need to make sure that you have the funds to hold you for that month while you're waiting for your Social Security money to come to you. Filing for survivor benefits on the phone or in person, either way is fine. You have the same person. If I have a phone appointment, I'm the same me as I am as in person. So it's whatever you're the most comfortable with when you're filing. But in all cases, you must tell us about all marriages. Sometimes people don't want to disclose to us that they've had prior marriages. Maybe they're a little embarrassed about an early marriage. Maybe it was an unhappy situation that led to the divorce. But what you tell us at Social Security doesn't go beyond us. And we are there to help you and to find you a benefit. So say I'm a woman who's had 2 prior marriages and my third husband has just passed. And I make an appointment to come in and file for benefits on that husband who just passed away. Well, if you were married 10 years or more to either or both of those prior husbands, I'm going to look at their records also. And I'm going to find the highest payment record for you, and I'm going to pay you that money. So come armed with marriage and divorce certificates and their Social Security numbers. I need their Social Security numbers so I can check those records for you. Now, even though I'm speaking as a woman and I'm speaking from that viewpoint, it works for men just the same. The policies go either way. As long as you have met that duration of marriage requirement of 10 years, I am going to look at all the other records and find out where I can most pay you. That's my job. How many people can go to work and say, my whole job is paying you money, and I'm supposed to look for any other way to give you any more money? That's part of what is required of me. That's incumbent upon me and all the reps who work at Social Security. Those are great questions. Way back at the top. Thank you. Microphone is on its way. Thanks for your patience. This has been a great group. Thank you so much. These are really good questions.
I have a question over here, Betty.
Okay.
In regards to the lady over there that said we don't have to sign up for Medicare as
Right.
long as we're employed, what happens if we don't and we have to go in the hospital? Does that mean that if we haven't signed up for Medicare, we might end up with a small balance?
If your insurance here does not completely cover that hospitalization, that's possible. So if you have Medicare Part A, they might pick up whatever the university coverage doesn't. That's why, from our perspective, if it's free and it's easy to do, if it doesn't make anything bad here at the U of M, why not? Why not have that inpatient coverage? Yes, question at the back.
Yeah, I have a Medicare question.
Okay.
My wife turns 65 in a couple of weeks. She's still working, probably going to work for about another 18 months.
Okay.
She's covered under my insurance here at the hospital, and I won't retire for probably another 4 or 5 years. We will qualify for the retiree health benefit here at the university. So what should I do in regards to signing her up for Medicare?
So the question is that his wife is going to be turning 65 soon. You're still working. You still have full medical coverage. And here's the operative word: through current employment. What does my wife need to do? Your wife can sign up for Medicare Part A or nothing. As long as she is on your insurance coverage and you have current employment, she does not have to sign up for Part B until such time as you separate from the university. And that's when the forms from the university and for you guys to fill out, that's where that comes in. So about a month ahead, if you know. And you don't have to come in a month ahead. I just like to err on the side of caution. So if you can come in a month ahead or the month of retirement, it just gives you and I the greatest possible chance of giving you the coverage when you need it and getting it right away. Does that make sense? Current employment is always the operative word with Medicare. So, for instance, if your wife had been covered under her employer all this time and you were under U of M, prior to her turning 65, you moved her over to yours, we're still good with that. And that's something that you can do to put off that enrollment for the Part B.
I have an online question for you.
Certainly, I'm ready.
I have earned retirement eligibility, both U.S. Social Security and the Canadian Pension Plan. Does U.S. law take in account of the Canadian benefits in calculating Social Security benefits, or are they two completely independently assessed?
That's an excellent question. So they have enough credits for retirement under Social Security, and this person also has enough credits from Canada. Canada is an interesting system. They have a two-tier retirement system. They have a pension amount monthly based on old age alone, and they have one based on work. So yes, I may decrease your Social Security retirement money by that portion of your Canadian pension that is based on work. I do not look at the part based on old age. That's completely separate. But I am going to look at the Canadian pension that is based on work, and you may fall into that category called WEP, Windfall Elimination Provision. So you might want to go online and take a look at that calculator and see if you can use that and get an idea of how much you'll be receiving and how much we will offset you or reduce you. Yes, there's a question here in the front.
I worked for 4 years in Colorado and for the school system, and my money went into Colorado Para those 4 years. So I think I'm probably going to have to take that windfall elimination. But what I'm going to ask is next year, when I turn 65, they offer me the option of taking the money and they will double it, or I can begin a monthly amount. And I didn't know if either one of those categories mattered in regards to my Social Security.
For Colorado, that Colorado pension. I don't want to speak too much to that, but what I would say is if you have worked long enough under the Social Security system, that we may not worry about that. So depending on how many years of coverage you have here, remember that sliding scale I showed you? You may be higher up on that sliding scale if you only did 4 years there. If you had taken that money out when you left Colorado and just used it and invested it as you would, it would not have counted against you. But what I'm understanding is that it's still there. Is that correct? So I would take a look at that windfall elimination calculator online and play with that a little bit and see if you can tell how much of a change that will make. Okay? Yes?
Hello.
Hi.
I have two questions. One is just clarification.
Sure.
If I I turn 65 next September. If I decide to retire, I can apply and start collecting my retirement benefits then and continue to work?
You will be, at age 65, you are subject to that annual earnings limit of $16,920.
Okay.
We will presume that you have already hit that threshold prior to September. So then I'm only going to look at your earnings as of the month I entitle you. So if I entitle you as of September, you cannot go over the monthly limit, September, October, November, December.
And I apologize. I'll be 66 a year from September. So.
66, I don't
Same
care.
Okay.
66, you have no earnings limit.
Okay, very good. The other part is my wife is quite a bit younger than I am, and so I'll be retired when she'll still be working. Does my Medicare, applying for Medicare, in any way affect her coverage of me?
Well, you can potentially. So did you hear the question? His wife is younger and she'll continue to work after this gentleman retires. If your wife can put you on her retirement insurance, then you can delay filing for Medicare Part B. I have no idea how that will affect your university coverage, so you would need to talk to the benefits department about that. But that is one way to delay filing for the Part B if you can go on her employment insurance. Does she work for a company that's quite large? Are there more than 20 employees? Then you would be safe to do that in terms of Social Security and Medicare. You're welcome. A couple of questions in the back. Oh, over here, thank you.
If I retire from the university at full retirement age, don't work for a year and move and start somewhere else, is that something that automatically is known by Social Security in terms of adjustments, or do I need to go back online and...
Depending on what you are talking about, known automatically, we are going to get reports from the IRS. We're going to automatically recompute your benefit every year, but we won't know you've moved. And we won't know if you have a new phone number or a new direct deposit. So you can go online and make all of those changes yourself once you go on to the My SSA account, if you get that established.
Things would be adjusted then based on the new job salary and everything.
Any earnings, yes. So when we look at your highest 35 out of 40 years, we automatically pick 2 low years and 2 high years. So if in retirement, your earnings are higher than one of those low years, I take out that low year, I plug in the high year, recompute the whole thing. And we do that automatically every year. You never have to ask us to do that.
My retirement might be a bit different than most people because I got a farm, and when I'm at under that 66, where if a profit I made, you're going to deduct it. How do I tell? Because we don't get paid till the harvest time, and would I have to show you what we paid for seeds and then the profit, or we rent out 10 acres for feed corn? Now, how do we do that?
So in your situation, we'd have to look at your tax returns. It would be wise for you when you come in to file to maybe bring in a couple of years of tax returns so we can take a look at what your net is. Anyone who is self-employed, and I'm assuming that's how you file under self-employment, there are 3 different ways of assessing your involvement in the business. And so very often, farmers wait till full retirement age because then I don't care. But there are times when somebody who is farming for a living does need to take it early, and that's when we have a personal conversation about what you do. That would be one situation where I would say you might want to come in and talk to somebody. Thank you.
I have an online question.
Okay. I'm having to look for voices. Thank you.
Will I be notified if my ex-spouse claims half of my Social Security? If she does, how much, if any, and how much will I lose?
So if an ex-spouse files on your record, there is no change to what you yourself receive. A divorced spouse calculation is outside of the family amount. So remember I mentioned that I'm never going to pay a spouse or a child money that's really supposed to be yours. We start our computations with your full retirement amount, and then we figure out a family amount. I call it the family pot. So that family pot exists in case I need to pay a spouse, a minor child, a disabled child. The ex-spouse is not figured out of that pot. They're figured completely separately. So a living spouse, whether current or ex, can receive up to 50% of the full retirement age amount, reduced for age and or reduced if they're receiving their own benefit. Does that make sense? There's a lot of reducing in there. but you will not be notified if someone has filed on your record. That goes for children or ex-spouses. You have the ability to know that information if you call and ask us. Under the privacy laws, we can tell you that someone is drawing from your record. We cannot tell you where they are, how to reach them, their phone number. We can give you very little information due to the very strict privacy laws. But if that ex-spouse meets all of the criteria for filing, then that application will be taken and completed, and they will be paid. So you have the right to know, but you will not be notified that they're receiving on your record.
If
Yes.
If I file at 68 and then continue to work 5 or 6 months, does my retirement, if I understand you correctly, Social Security will go up? Will it go up then when I retire, the next month after I retire, or at the end of the year?
So those increases based on additional earnings are done once a year. And I tell people it's a rolling period. You know, we have to get the information from IRS. And so it can start anytime in the spring and keep rolling until it's done. You normally, it's sometimes done in the fall too, but a lot of times it's done in the spring. And you have to wait a while to get that done, obviously, that recomputation. Now, if you really needed the money and you wanted to come in with your W-2, we could recompute it then and there. It's not something we encourage because we just don't have enough staff to handle that. But if you had a very specific reason that you really needed that, then we would do that for you in the office, and then it would come within 30 to 60 days. Yes. Definitely. This lady right in the front has had a question for quite some time with her hand
Online
up.
question?
Yes,
If an individual retroactively begins Medicare, how do the retro premiums get paid? Example, are they all taken at once from Social Security, or are you billed and are the payments spread out over time?
If you are receiving money from Social Security and you file for Medicare and your Medicare is effective retroactively, generally speaking, they take it out in one lump sum. If you are notified that they're going to do that and you cannot afford that, there is a number provided in that letter, and you can call that number and see if you can set up an arrangement where you maybe make it in 2 payments or 3 payments. But generally speaking, if you get money from SSA, they're going to take that whole chunk out at one time to get you caught up. Yes?
I have 2 questions.
Okay.
I'm from England, and so I spent my first 16 years working in England.
Okay.
And your the Canadian one was similar, and you said it was age versus work years. What does that mean? And
my understanding for UK is that you also have a 2-tiered retirement system. So you have a portion of your money that comes to you simply because you have attained a certain age. An old age pension, unfortunately, is what it's called. And then you have another portion of your pension which comes to you because of the work that you have performed and the wages that you have paid in. So the only one that Social Security will offset is the one that is due to you based on your work. If you are in a situation where you don't have enough earnings in the UK and you might not have enough here, we can combine UK and US earnings in what is called a totalization agreement, and we can pay you one benefit based on the earnings from both countries. That is not something, the application would be taken locally. It is not completed locally. It is completed in Baltimore, Maryland, and it can take many, many months, up to a year, to finalize because they have to contact that foreign country directly and get everything certified, the earnings records certified from there, and then they move forward. So locally, we would take the application, but then you would be dealing with another office in Baltimore to get that completed.
so it's in my benefit to apply a lot earlier for the UK one.
As long as you are aware, and do you have enough in the UK already to file for them? Don't know yet. Check. You should check. That would be the best idea, is to check with the pension bureau there and find out, do you have enough to receive a benefit, and to find out if they can tell you how much will be based on age and how much based on your employment.
Thank you.
You're welcome.
The time is currently 12:19. Questions and answers will be ceasing at 12:45.
Hello.
I got a question about the Medicare.
Yes.
And after I retired, and I know the Medicare would be my primary.
Yes.
And my university retirement health insurance would be secondary.
Correct.
Does that mean I have no out-of-pocket expenses except the premium copays?
Well, I can address A and B. I know that there are copays and premiums for both of those, for Medicare A and B. So I can't address what the university will cover. That would be something that you can talk to your benefits department about. We would hope that you would have excellent coverage. My understanding is that the university, functions as your Part C, and that is designed to help you pay for those things that A and B don't pay for. So that's more specific to university coverage, I believe. You're welcome.
Online question?
Sure.
If someone is in a higher income level, which means they will pay a higher monthly premium for Part B, what information do they need to provide to show their new income? Is there a time frame that this must be provided within? Will already paid premiums be reduced, or is it just going forward?
Those are excellent questions. So when I talked about the Medicare premium being $134 a month per person, I kind of touched on the fact that you might be asked to pay more if you fall under a higher income bracket. $134 a month represents 25% of the actual cost of your Medicare Part B coverage, and the federal government pays the rest. If you reach a particular threshold, and I don't have those memorized, you can look online and you see those. It depends on your tax filing, single, married filing jointly, married filing separately. You may be asked to pay more than $134 a month for your Medicare Part B. However, generally, you're getting your Medicare around the time that you retire. And that Medicare law allows for something called a life-changing event, which can possibly reduce your monthly premium back down to that $134 a month level. There's a form online at our website, and it's called an SSA 44. SSA 44. Completion of that form, mailing into the office or coming into the office with proof of your retirement, if that's your life-changing event, can help us potentially reduce that payment for you. We do inputs, another office notifies you. A life-changing event would include things like work stoppage, work reduction, death of a spouse, divorce, and then there are a few other more specific types of life-changing events that are not very common, that I don't see very often. But your income has to have gone down. So you can't just have a life-changing event. You have to have a situation where your modified adjusted gross income has reduced because of that life-changing event. So just having a life-changing event doesn't reduce the premium, but having a life-changing event and a reduction in income because of the life-changing event may give you a lower or, say, normal standard monthly premium. That's a confusing thing. And I do have some brochures out in the hall on the table about that as well, and I think it would show the threshold amounts.
I'm just trying to be clear about this.
Certainly.
I'm working for the university. I plan to work past 65. But if I sign up for Medicare Part A at 65, is there any penalties to that?
None at all.
And then where do I sign up for the Medicare?
So Medicare Part A, if you do decide to file, is a very simple application. And you can go online to www.socialsecurity.gov. Always use .gov. And you'll find on their homepage, which just updated, so I can't tell you exactly where on the page it is, I usually can, where it will say online services or it'll say Medicare. And as you answer the questions, the way you answer them brings up the next appropriate question. So you almost can't go wrong on that. And you're going to get to one that says, do you want Medicare Part B? They're going to say, are you still employed? When did you start there? How long have you worked there? Do you have coverage through that? Do you have coverage through a spouse? If you just answer straightforward exactly what they're asking you and not try to read into it, by the time you get done, you should be signed up for Part A. But there is no penalty, and you can do it with someone like myself by calling and scheduling an appointment or walking in.
I have an online question. I'm a U of M employee. My ex-husband passed away in 2016, but we were divorced a few months prior to his death. We were married for 22 plus years, and I was born in 1953. He was born in 1962. Would I be able to draw his retirement benefit when I reach age 66, and then draw mine at age 70?
As I understand the question as you've presented it, that answer would be yes. As a widow or widower, you have a choice whether to take your own benefit or to take a surviving spouse benefit instead.
She was divorced.
They were divorced. How long were they divorced?
It does not say how long they were divorced, but they were married for 22 plus years.
The duration of marriage is what counts in that situation, and they've met that duration requirement by being married 22 years. I will caution, though, that if you want to take a widow or widower's benefit before full retirement age, you are subject to that same earnings limit that you are subject to if you're taking retirement. So a widow's benefit at an age prior to age 66, there is an earnings limit, just as there would be for retirement or spousal benefits before age 66. And it's exactly the same limit, $16,920. Hopefully it'll go up a little bit next year. People want to say, oh, that's so little money. And I have to say, well, you have to be retired. If you're earning more than that, the government doesn't think you're retired. The microphone is on its way.
This may be a question that might be answered online, but
that's all right.
I'm going to be retiring before I'm 62.
Okay.
So I'm trying to decide when to start collecting, 62, 63, 60. So when I look online, I see the chart, when you're 62, when you're 66, when you're 70. So say if I don't want to start at 62, but maybe 63 or 64, does that go up per year?
It does. And it's not every year, it's a monthly change. So if you want, when you look at your statement, it tells you how much you're going to receive at 62, how much at 66, how much at 70, but you can retire anytime in between. Yep. The calculator, the estimator is online, and you should be able to put in different months and years and see how that changes for you. Common wisdom for Social Security has always been that if you are not working, go ahead and take your benefit. I don't advise anymore. I used to have people sign it on the dotted line if you didn't take it when it was most advantageous to you, which I thought was kind of crazy. Now it's up to you. But what I want you to keep in mind is if you are not working and you are not taking your benefit until full retirement age, it takes 12 to 14 years after 66 to break even for not taking that money from 62 to 66. So, in other words, so you decide, you stop working, and you decide not to take your benefit till your full retirement age at 66. You got to live 12 to 14 more years after 66 to break even for having not taken that money from 62 to 66. So you have to be satisfied knowing that you have enough money coming in when that benefit starts coming to you and that you can afford your Medicare and any other expenses that you have, absolutely. But consider that break-even point. Yeah, I understand what you're saying. I've never ever thought about where at a point where you're losing money because you're always getting money. You're getting something. Exactly.
I have an online question.
And then after that, there's a question way in the back, up in the corner. Okay.
If I draw off my ex-spouse's SSA and he dies, does my monthly rate change or end?
Your monthly, so if you're drawing off of your ex-spouse and that person passes, if you're already on that record drawing as a living ex-wife or ex-husband, we will automatically recompute your benefit as a surviving ex-wife or ex-husband. We can pay a higher percentage of benefits upon death than we can for a living spouse or ex-spouse. And it can be 75% or more, whereas as a living spouse, the maximum was 50%. So if you are already receiving on that record, more than likely, that will be done automatically. However, if you're receiving on your own and that ex-husband's record or ex-wife's record, you might want to check with us. We might need to take an application. If you receive only on that record, we will automatically convert you. But if you get some of your own and some of that one, we're going to need to take an application. Yes?
So I have what I think is a timing question.
Okay.
I'm currently 65, still working at the university. I do plan to retire this fall. after I turned 66 in early November. When I've spoken to Social Security people in the past, I've been encouraged to apply early, as much as 3 months in advance to ensure that the application is processed properly. So I'm just wondering, since I am 65, I also did not apply for Part A or Part B Medicare. I'm trying to think how to coordinate getting this form, as you mentioned, as necessary proof of employment through HR, and how to submit that at the same time, when to do all that.
So you're in kind of an interesting position because you're 65 now, correct? Am I
Yes.
understanding you correctly? So we have to be careful that you are not in your initial enrollment period. You know, Medicare has initial enrollment period, general enrollment period, and special enrollment period. If your initial enrollment period overlaps with your special enrollment period, the rules of the initial enrollment period will rule the day, and I won't have any option on when you're going to start it. So you're turning, when were you 65? What month? October. So you're outside of your initial enrollment period already, so you're safe. So what you can do, we can take an application 3 months ahead of the time where you want to be entitled. But we can also take it in November. So if you're retiring in November, and November is your first non-working month, you can take it in October. Because if you turn 66 in October, I don't care if you're retired from here or not, I can entitle you in October. I can entitle you in November, it'll be slightly higher. I can entitle you in December, and it's going to be slightly higher. But your money will always come to you a month later than your entitlement date. So if you select October, your October money will arrive in November. I'd like for you to do your paperwork for Medicare before you come in to the office, but you don't have to. If you don't have it, you can file online, and then in remarks you would say, I will mail in or I will bring in the Medicare enrollment forms to the local office. Somebody that works for Social Security has to see those enrollment forms. Medicare does not allow for online attestation. Social Security has verbal attestation, online attestation, but Medicare does not. They still require a pen and ink signature on those two forms. So that's my only concern. I'm sorry? You can, absolutely, but there's no reason why you can't do it online and then put it in remarks. I understand your hesitancy. Medicare is a big deal, and you don't want it to get messed up. I have complete empathy. I have helped people through the messiest Medicare things that you could even imagine, and it is rough because I'm not Medicare, but I'm willing to sit down and do what I can to help them. So if you wanted to be very, very certain, we would welcome you in our office.
I have an online question.
Certainly.
I have been divorced for almost 30 years. Would I have to provide both the marriage certificate and divorce papers to file for benefits?
Yes, anytime you file for benefits as an ex-spouse, I have to see the marriage certificate and the divorce certificate as well. They must be certified copies. What I see all the time, and this is going to sound funny, but it's true, I see true copies. That doesn't work for me. I have to see a certified copy. What happens is women don't have the certified copy. Guess who has a certified copy? The men have it. The lawyers have given certified copies to the men in that divorce and not to the women. Let that just speak to itself. So, contact the county or the state where you have married and divorced and have those documents with you when you come in, and it's smooth sailing.
Hi, I have a question in regards to the magic birth date.
Yes.
Let's see. My wife was born 1952, July. I was born in 56.
Mm-hmm.
How does that, she makes about a third, I make about 2/3 of our household income.
Mm-hmm.
Who should file when on who and how much? And
if you
I'm a little confused about that.
I understand. If you are currently married, your wife cannot draw from your record until you have filed. If you are divorced, she can. But if you are still married, she has to wait for you to file on your record. Before the law changed, if you were at full retirement age and filed and suspended, we would have let her file on yours and get money. In this situation, because you're considerably younger, it's not really going to work well for you. So under most circumstances, if I'm understanding you correctly, does she have insurance? Does she have enough quarters of credit on her own record? Yeah. Then she might want to take her own and be receiving that while she waits for you. And then once you file, we'll give her more money, I'm assuming, based on what you told me, from your record to add to what she's already receiving. She should look at her full retirement age amount online. You should look at your full retirement age. If hers is less than half of yours, she's going to get some extra money from you. Yes. Thank you. Okay.
I have an ex-spouse. We were married for 17 years.
Okay.
I am currently remarried, and we have been married 14 years. Can I claim my ex-spouse?
How old were you when you got remarried?
I'm 66 now, so that was.
So you remarried
50.
before age 60.
Mm-hmm.
So you would have to draw on your current husband's record if you were going to draw a spousal benefit. Should your current husband pass, we would then look to see if that ex-spouse had a benefit that would pay more to you than what your recently deceased spouse would pay you. Does that make sense?
Okay.
So as long as you are married now, you can't draw on an ex-husband unless you married this guy after you turned 60.
No.
So if you married before 60, you're stuck.
Okay.
But hopefully you're stuck with a good guy.
Well, so even because my first husband has since passed, but because I married before age 60, I cannot claim without.
Yeah, and it's interesting because there's a little caveat in there also. Even if you had married before 60, after 60, if you weren't already drawing when you married him, I couldn't entitle you. You have to be unmarried to get that benefit. So if you were getting it from your ex-husband and then you got remarried after 60, you could stay on that. So as long as you are married and you were not on an ex record prior to that marriage and prior to 60, you're going to stay with the husband that you got. Two things, yep. You married before 60 and you were not on that benefit before you married. You're welcome.
I'd like to thank everyone for their attendance this morning. That was our last question, and the question and answer session has now completed. Thank you so much.
Thank you. Thank you very much. Great audience.